What are the biggest expectations that you have for the coming weeks here in the new Biden administration?
Yeah, I mean, I think the biggest thing that I'm looking forward to in the weeks ahead really is what is stimulus going to actually look like. We know what Biden's plan is, but there are questions about what the GOP is going to do, and if we're really actually going to get that 1.9 trillion, or if it's going to be a little bit less. So that's where my eyes are focused in the weeks ahead. Obviously, the vaccine, the rollout of the vaccine too, is another major initiative for the Biden administration that would have major implications for the economic environment too. So if we can increase the distribution of that, I definitely view that as a positive for the market.
What exactly, Jay, does the economic environment look like? I mean, we know what it looks like right now. What can we expect the economy to look like in, say, a few months or 6 months' time, given the policy initiatives that we know the Biden administration will prioritize in its first weeks in office?
Well, frankly, I don't know how much those policies will actually impact the economy later this year. I mean, I think growth later this year, assuming the deployment of vaccines continues, assuming that the vaccine doesn't accelerate or the virus doesn't accelerate from here, I think you're looking at pretty strong growth in the second half of the year as the economy reopens, as pent-up demand for services are released. The things that probably will survive in this 1.9 trillion package, things like more aid to open up schools, more aid for vaccine deployment and development. Those things are pretty small in terms of the actual economy. Direct checks to people, I don't know if that's going to actually survive here. So, again, I think the economic outlook, second half of the year is actually pretty good, even without some of this policy stimulus.
Jay, economists like to model things. Let's talk about how you are modeling things right now. How long will it take the U.S. and the economy to get back to what it was like back in 2019 before the COVID pandemic?
So in our model, we have the level of GDP getting back to its 2019 peak later this year. Now, that still means there's still going to be a pretty big hole in the economy because it would have grown over these last 2 years. I mean, another way to think about it is the unemployment rate. Before the pandemic hit, the unemployment rate in the United States was 3.5%. It's close to 7% right now. At the end of this year, it's maybe at 6%. The end of next year, it's down to 5%. So there still will be a hole in the economy because lots of these millions of jobs that have been lost aren't coming back.
Lindsay, what are the key parts of the market? What are the key parts of the economy to focus on in the next 4 years? We had previous guests say that the renewed focus will be on things like clean energy. It will be on things like financials. It will be on things like materials and industrials. What exactly do you think is going to be the real focal point for investors in the coming years?
Yeah, I mean, I think I'm pretty much in that same camp. I think in the coming years, especially in the near term, what you have historically seen coming out of an economic recession and entering into the early stages of a recovery is you see value-oriented stocks usually thrive. And of course, we know the value-oriented style of investing has lagged growth for the better part of the past 10 years. So we do believe there's still opportunity. Some portions of that style of investing have perked up and shown big signs of life in the last couple months, the financials and energy being two examples of that. But I also think going into the new year, while the industrial sector as well as the material sector have, from a performance perspective, done very well, I think that they still continue, especially industrials, continue to have opportunity on the earnings front. Numbers remain very depressed there. And these are sectors that are going to benefit from the global recovery, where we begin to start to see other parts of the world recover, just like we're seeing in Asia, China in particular. We're seeing other parts of the world recover more quickly, or sooner, I should say, than the U.S. And so I think that industrial materials are sectors that you can continue to stay in if you've taken advantage of the recent rally that we've seen there. And again, it's really going back to value-oriented sectors. That doesn't mean, I think, though, that technology and growth is going to be left to the wayside. I think there's definitely still some opportunity there, especially given the moderation that we've seen, the digestion that we've seen in those parts of the market over the last month or so. And I do think that it has a specific place within our economy and within the marketplace. So we'll be watching all of that. There just is probably more upside in the other areas that I mentioned.
Shepard Smith here. Thanks for watching CNBC on YouTube.